Hi friends, welcome back to my channel, and today we are going to solve the problem admission of a partner. So here Shravan and Swarup were sharing profits and losses in the ratio of 7 is to 3. They were to admit a new partner and decided to introduce the following changes in the books of accounts. So here you can see that distribution of general reserve of rupees 20,000. Then second one is revalue and after the book value of furniture to rupees 8,800 from its present book value of 10,200, and decrease the provision for doubtful debts from rupees 6,000 to 4,500. Record the newly admitted claim of 9,000 payable to employees as bonus. And last fifth one is write off rupees 3,000 from the book value of buildings. So write journal entries for the above and prepare revaluation account and also general reserve account. So friends, here the question is asking us to prepare to write the journal entries and prepare revaluation account and general reserve account. So let us prepare the journal entries first. Okay. So journal entries. Okay. The first entry is, so we have to distribute the general reserve, distribution of general reserve of 20,000. So that is according to their ratio 7 is to 3. So 20,000 into 7 divided by 10. How much it is? 14,000 for 7 and the remaining 6,000 for the Swarup. So general reserve account, general reserve account DR to Shravan account and to Swarup account. So that is 20,000, and if we calculate in them ratio, like 14,000 for Shravan and 6,000 for Swarup. So being general reserve distributed among the old partners. So here the new partner is not going to take the distribution of share because it is not necessary. Then second one is, now we have to look at the assets, whether the values are decreasing and appreciating, right, increasing or decreasing. So the revalue after the book value of furniture, revalue and alter the book value of furniture to 8,800 from its present value of 10,200. So now present book value, how much it is there? 10,200 minus 8,800. How much it is decreased? 1,400. So where we have to debited this 1,400 to revaluation account, because revaluation account completely it is based on the nominal account rule: debit all expenses and losses, credit all incomes and gains. So we have to debit it to revaluation account. So the second entry is revaluation account DR to furniture account. How much it is? 1,400. Right. The next one is, here you can see record the newly admitted claim of 9,000 payable to employees as bonus. So it is also liable. So the bonus which is there need to be paid to the newly admitted claim. So employees, so this is a bonus. So it is a loss to the or expenditure to the business. So that's why again this is also debiting to the revaluation account. So to employee bonus account, how much it is? 9,000. Then what is the next here? Now look at the billings here. Write off 3,000. Write off 3,000 from book value of buildings. From book value of buildings. So the write off means that is nothing but decreased. 3,000 has been decreased from the building value. So we doesn't know the exact value of building. We doesn't require also, because here it is telling that write off that has to be written off or minus, or we have to subtract from the building. That means it's a loss to the business. Again it is going to be debited to the revaluation account. So to buildings account 3,000. Okay, and if you add these 9,000, 3,000 and 1,400, that is come to 13,400. So 13,400. Right. The third journal entry is now look at here, third adjustment, third one, decrease the provision for doubtful debts from 6,000 to 4,500. Now whenever it's a liability, right, decrease the provision for doubtful debts from 6,000 to 4,500. So the doubtful debts have been decreased from 6,000 to 4,500. It means it is a gain to the business, right? Outsider customer has to pay that 6,000 to the firm, right? We don't know in the previous previous year he might have taken that 6,000, right, products, but that he didn't pay the 6,000 amount. So that is a debt to the company. So 6,000 has been decreased to 4,500. Now it means 1,500 has been paid off. 1,500 has been paid off, but 4,500 still it is a debt to the company. That means here 1,500 has been gained by the company. What we are going to write here? Provision, because see, whatever the gains are incurred by the firm, that need to be credited to the revaluation account, not debited. You debit all the expenses and losses and you credit all the incomes and gains. So provision for doubtful debts account DR to revaluation account. So 1,500 and 1,500. 1,500 and 1,500. And what is the last one here? Right. You just what you do, you subtract all debtors from creditors or all creditors from debtors. So whichever is the high here, whichever is the high. So 1,500, provision for 1,500, doubtful debts is the creditors. What is the total of creditors here? 1,500. What is the total of debtors? 13,400. Because all these are debited to revaluation and this provision for doubtful debt is credited to the revaluation. Now you just do the subtract from 13,400, 1,500. 13,400 minus 1,500. What is the loss here? What is the loss that you are going to write? 11,000 900. So that must be written on the credit side of the revaluation account. Shravan account debtor, Swaroop account debtor to revaluation account. So it's 11,900. Whatever the 11,900 is there, you need to share according to their profit sharing ratio. So into, what is the profit sharing ratio here? 7:3. So 11,000, that you have to do 11,000 into 7 divided by 10. So 833, that is for Shravan, 8,330, and 11,900 into 3 divided by 10. For Swaroop, what is the share of loss here? 3,570. Isn't it? Now I hope you understood. So once we complete the journal entries, so this is the way you have to prepare the journal entries when it is asked in the question. So when you finish the journal entries, and what you need to prepare here, what is asking? Write journal entries for the above and prepare revaluation account. We need to prepare again revaluation account and general reserve account. Revaluation account. Okay, let us will prepare the revaluation account. Next thing, this is step number 1. Journal entry step number 1. And what is step number 2 here? We are preparing the revaluation account. Revaluation account. So this is how we are going to prepare, like a ledger account form. Particulars, amount, particulars, amount. Okay. DR and CM. Right. So simply you need to do the ledger posting. Once you finish the journal entries, so what are the transactions related to revaluation account, you need to do the opposite posting entries. That is nothing but like ledger posting. See here revaluation account is there. So revaluation account is now debited. Right, it is written in the debit side, okay, not in the credit side. 2 is nothing but, 2 form is nothing but like credit side, or DR is nothing but debit side, okay. So debit side, we need to write the debit side. What are the entries that opposite entries we have to written off, write it in the debit side of the revaluation account. Is it clear now? We should not take the same name in the same account. So now we are preparing the revaluation account. That means all the opposite entries we need to debit it. Now see here, what is furniture account? That is 1400. So to furniture 1400, and next what is there? Employee bonus. Okay, again to employee bonus, how much it is? 9,000. Then what is the next here? To buildings 3,000. To buildings 3,000. Is it clear now? Now come here, what are the entries related to revaluation account which is written on the credit side? So we have to write this provision for doubtful debts on the credit side, because which side it is written on written this account, revaluation account, the credit side. It is not on the debit side form, okay. So we have to take this opposite entry. What is opposite entry? For provision for doubtful debts. So that we need to here credit side by provision for doubtful debts. Is it clear now? How much it is there? 1,500. Okay. So what is the total here? 13,400 and 1,500. That means again the same story here. So 11,900 is the loss, right? It came. Now this loss has been distributed to whom? Old partners, Shravan and Swarup. So which side it is the low balance is there? Credit side. If you want a total to debit total equal to debit total, now we have to write this loss on the credit side. So how we are going to write? By loss okay, that is Shravan account and Swarup account. What is the sharing ratio, loss sharing ratio to both of them? 8330 and 3570. It comes to 11,900. And what is the total here? Okay, 1500 plus 11,900, 13,400. Again same here also 13,400. Okay, if you calculate all these 3,000, 9,000 and 1,400. Now we have finished the revaluation account. What is the next remaining balance here? We have to prepare the third step number 3, that is general reserve account. Okay, this is also same ledger format, ledger account. Okay, particulars, amount, general reserve account. Right, what is the general reserve balance is there? So that has to be, right, we have to take that credit side by balance brought down 20,000. Okay, 20,000, and debit the receiver. General reserve account is nothing but like personal account rule, credit the giver and debit the receiver. Like to Shravan has received how much? Shravan account, that is 14,000, and to Swarup account 6,000. So both the side it is equal 20,000. Understood now, friends? So this is how we have to do the accounting in the admission of a partner for this kind of questions. So we have to do only what it is asked in the question. Write general entries for the above and prepare evaluation account and general reserve. Not more than this. Only 3 we have to prepare. What is the step number 1? General entries. Step number 2, revaluation account. Step number 3, general reserve account. And you also got the answer here. Correct answer 11,900. Loss, right? Now the loss has been shared by the old partners. So this is how you have to prepare all the entries and revaluation account and general reserve account. Thank you, friends. If you like this video, please like and subscribe.